Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton. Thank you very much for joining me. Overnight, the Australian dollar traded to a high of 72.99 and from that point hit a wall of resistance. The catalyst behind the greenback's weakness recently is the split between the US midterm election results, with the Democrats returning the House of Representatives and the Republicans holding on the Senate. The government is basically at gridlock. To come is the anticipated two-day Federal Reserve meeting that wraps up Thursday, but at 6 a.m. on Friday is the release. It is expected that the central bank isn't to change their view on interest rates and hold till December, where I expect to see a further rate hike of 25 basis points. But the key level of what we're looking for is the fact is what the statement says. Looking to the Australian dollar, at present, it is pretty tricky to see where the top is. Really, for the fact is that we got a rejection from 73 cents, and since the break of this midway point and the 60-day moving average has given the last 3 days of bullishness, but we are overbought and the trend is overheating. Therefore, we could see resistance in the short term from 95 and look back towards 72.25 and reassess from there. Well, the euro took a stab at the top side as the dollar index plummeted to a low of 95.49 before staging a mild recovery to 95.70. It is assessed, though, that the stab at 114.55 didn't fully break it, and from the long-legged doji does question whether the market has found a bit of a supply zone around that region and look back towards the downside with immediate support seen at 113.80, and a break there would expect further weakness. Well, it would seem the market also took a challenge to the upside for dollar yen and fouled at 113.65 and dropped back quite sharply. However, we're not quite out of that zone yet, and we are seeing another test as the bulls return for a re-challenge of 113.65.70. I don't expect to see this level break today. I still view as a supply and could see a rejection again and look back towards 113.05 to 112.35 and reassess from there. My view on the pound has been pretty much neutral due to the fact is that the market is pretty much just rallying on the back of Brexit, and with the latest update that UK Trade Secretary Liam Fox said that there were still several Brexit issues that need to be dealt with, and it could possibly see Brexit failing to reach any deal by this month or even next. But the market has simply shrugged that off, but resistance is seen at 131.70 at this stage, and see if it can hold there. Support on the day, 130.80. The gold has weakened overnight, but took a stab again at that level of 1,236 for the fourth time, or should I say the fifth, actually. From the rejection, looks back towards the support region seen at 1,221, maybe down towards the region of 1,216.18, but nevertheless, I am bullish still, and I do expect to see the market rebound, as long as we hold above 12.12, and look back towards the region of 46.250. Well, overnight, oil took another stab to the downside at the 33-week low and posted a 61.25 low, that is, and from there, I still view the market as a buy around this 61.40-60 region. I'm not a bear, and if you look at the dailies, we are getting to a point that could see a recovery from here. So I do expect to see the market rally back towards the region of roughly around $65 a barrel. Keep your stops quite tight beneath 61.40. Well, that wraps up for today. Thank you very much for joining me. I hope you enjoy the rest of the day that's ahead.